Good afternoon. Today we're talking about distribution of income versus taxation. We're going to start off with a theory, then we're going to keep on with China and the UK, and then we're going to explain a little bit about Lorentz curve. When we're talking about distribution of income, is how well allocated is the economy in terms of income. This tends to relate with how unequal is income in terms of society, meaning how wide is the gap between the rich and the poor. Therefore, it is said to be associated with free market economies as it relates to the lacking of equality in terms of income. As a matter of fact, the reasons are many and complex. People with low incomes will experience relatively low living standards and fewer opportunities than people with higher incomes. This can be argued that it's unfair as people with low incomes don't have access to basic necessities needed to live an average life. Income can consequently be low because they have lived in a household with scarcity of needs, and so they have experienced little opportunity to break these tight bonds of society. Additionally, this will mean that because of these conditions, education, malnutrition will consequently not allow them to develop into a proper job. Income may be low because human capital keeps some people in low-paying jobs and also due to unemployment. So, in a way, we can argue that how well distributed is the income is how well the economic will develop in terms of growth and society. Psychological thinking, economists consider that higher incomes will act as an incentive for people to work harder. Therefore, the reason why people encourage and develop such hard work in schools or work is because their welfare will be higher and they could live a better life. However, it is difficult to argue that no inequalities will be the answer, as it is also unfair for people who actually do have that potential to be economically better. Therefore, governments tend to influence in the distribution of income by affecting it by taxation. So basically, taxes might be used to reduce the consumption of goods and increase negative externalities. Also, taxes are a good source to increase the government revenue. They can be raised or lowered to manage the aggregate demands in an economy. So, a tax is imposed, a financial charge or other levy upon a taxpayer. There are two types of taxes: direct taxes, taxes imposed on people's income or wealth, and on firms' profit. These ones are based on ability to pay and include in corporation tax, income tax, and national insurance contribution. They can sometimes work as a necessity to work harder and earn more, as it will automatically equalize to pay more taxes. Indirect taxes, known as expenditure taxes or consumption-based tax, are included in the VAT in the UK, the GST in Canada and Australia. These ones are not charged on income but on custom duties levied on imports, excise duties on production and sale tax. Since they are less obvious, governments can easily increase them. To increase the government expenditure, they are technically regressive taxes. There are three different categories where it can be placed. We have the progressive tax. This means that as income rises, people pay a higher proportion of their income in taxes. Usually there exists an amount of income that is not taxed, and so people that earn low income can be significantly not be taxed. So as income rises, a higher percentage will be taken in as tax. Even though it might seem as easy, it is really more complex as tax deduction exists, as they allow to decrease the taxable income. Regressive tax. If the proportion paid on tax falls as income rises, indirect tax are regressive tax. For example, if we consider a person buying natural gas at a tax of $2, 1 liter, and assume the firm needs to spend $100 per month, for a person consuming $1,000, the tax will mean 10%, while a person buying $1,500, the tax will mean 1.5%. This tax is beneficial for the government as it allows to increase its taxation on demerit goods, but the problem is that it's considered unfair to low income levels in society. Lastly is the proportional tax. This can be considered as an equal tax for everything, meaning that no matter your proportion of income, the same amount of tax is always paid. This is considered beneficial as more countries tend to have a complicated tax system, and this will make it an easier system. The previous information I have just demonstrated is basically shown in a graph. As you can see, the progressive tax is currently increasing. The proportional tax is in between the progressive and the regressive, which is actually showing that if your tax-based income starts to increase, your tax paid as well. And your regressive tax means that, as you can see, as your income starts to rise, it seems that the proportion will start to rise. However, when you reach the end, a slightly curve is starting to be formed. This is just a clear demonstration for you to currently understand.
UK distribution of income. In terms of income, we know that the UK is a wealthy country. Virtually, there are no people living less than £4 a day. The UK tax system operates on a sliding scale very similar to most Western countries. In general, income tax is lower in the UK than many countries, including Australia and New Zealand. Consumption taxes tend to even things up, unless of course you save it. Australia GST, it's at 10%, New Zealand GST, it's at 12.5%, and South Africa VAT, it's at 14%, compared to the UK's 17 to 20%. The UK, therefore, is basically known because of its taxation system, and consequently, it's one of the reasons of why it's so developed. There are 7 different common types of tax in the UK, and these include the income tax. This one is common all over the globe, and it's imposed on the income earned at work. In time to time, it changes, but in the years of, and I quote, 2007 to 2008, the amount of the tax allowance is £5,225 for the people lying under the age of 65. However, the income tax pattern has changed in the UK throughout the years. There's also the capital gains tax, which is a type of income tax and is generally imposed on the selling of assets. For example, and I quote, for an individual, first £8,800 of the net profit is not under the scope of tax. The tax will be applied after that marginal point, and it's directly proportional to the uprising profit. For example, 10% tax will be taken for the next £2,150, 20% for the next £3,150, and so on. There's also the inheritance tax. This tax will be acted upon death and some long-time transfer at a rate of 40% and 20% respectively. However, there will be no tax for the first £2,850,000. In addition, there's the value-added tax, also known as the VAT, which is the direct tax included, the trade of taxable services and products made in the country. It's the 3rd highest source of income of the UK central government, and it's applicable on imported and exported products that comes from or goes outside the European Union as well. The standard rate of value-added tax is 17.5%. Moreover, some goods and services are kept out of the scope of value-added tax, and others, like domestic power and fuel, are rated as 5%. Moreover, there is the corporation tax, which people reside on working in the UK have to pay this tax. It's levied upon your income, but usually the rate tends to be the rate of corporation tax, and I quote, which is equal to 30%. It's imposed on the net gain if it goes beyond a certain limit, and this is £1,550,000. But for low-level companies, the rate is 19%, and that limit is £300,000. Therefore, from the previous facts about the UK, it's determined that it's progressive. It can be seen that as the income increases, as well as for your tax, for example in corporation tax, as for low-level companies it's a lower tax. Also, as a matter of fact, there is a regressive tax with the indirect taxes, as there exists a high percent of 17.5 with VAT, even though its fair 5% is charged with domestic goods like fuel, which make it automatically more accessible to the population. This is beneficial for the government, not only the VAT, but also excise duties, because they're so high they allow the government to provide more public services and goods.